Hello, hello. For all of you that are joining us, I wanted to thank you. And for all of my clients, I'm grateful for you guys. Just wanted to start these courses off. As I mentioned in an email, it'll be a 10-month course. We're calling it Money Matters. And this was a project that I had teamed up with a nonprofit called First Home IQ. First Home IQ is a nonprofit that we're starting to go in and teach fiscal literacy principles to those in high school, really ages 14 and up. Today's class is Money Matters 101, and it's more of a basic foundation to everything that we're going to talk about. So if you have any questions, let me know. Otherwise, for those of you that could not attend, I'm recording this, and so I'll send this out to you. I hope that you find value in this. It's something that I am very, very passionate about. You know, it's interesting when we talk about fiscal literacy. It's very interesting. When I was in high school, I graduated in 1991, and when I was in high school, we had to have economics, and we had to have economics one semester during the 4 years that we were there. And in order to graduate, we had to pass economics. Where today, most schools don't have any sort of fiscal literacy classes. In economics, we learned how to balance a checkbook, which is something we very rarely do anymore. We learned how the stock market worked. We had kind of a fictitious group that we invested with and everything. We learned budgeting principles. We learned how to write a check, which again, most people don't write checks anymore. It's all electronic. But we learned all of those principles through our economics class. It was a great class in that sense, and it really helped us learn, again, the basics. So our 10 courses are going to be going over today, again, as a foundation course. We're going to be talking about checking account, savings accounts, what type of an account you should have, where you should stick your money. Under the mattress is a no-go. So it should be in the bank, and where do we put where do we put our money? From there, we're going to start to build upon making a financial plan. Actually, next month, we're going to talk about the mindset of money. And so the things that we're taught at an early age, how those affect us as an adult and how we treat money. We're going to go into on our third class, we're going to start to talk about making a financial plan. So the things that we do to make a financial plan. From there, we're going to start to talk about budgeting. We're going to talk about debt management, how to get your first credit card. So for a lot of you, that doesn't pertain, but that would be to your kids. And so how to get your first credit card, but from there, how to manage your debt properly and well. We're going to continue to go through debt management, through how to be a really good renter, but as you're a renter, how to progress to becoming a homeowner. So you'll find that these classes are really designed for anybody 14 and older. They're designed really for more high school age individuals, to teach fiscal literacy principles to the high schools, which is what we're starting to do with First Home IQ. But what I have found is that they're great principles for anybody. So I want to start sharing them with you, hoping that not only would it add value to you, it would be things that you can remember, things that you can do, but also it can help give you the tools to be able to teach your family and your kids. And so bring your kids to the classes, share this information with them. You'll find that it will be very, very valuable to them. So we're going to start off here, and So when we're talking about money, we want to start talking about really what's important in your life. And so, so having a goal, um, starting to hone down what's important to your life and why. Why is that important to your life? Whatever it may be. Um, Now, I'll tell you that for me, when I was, I want to say I was 14, it was really important for me at that time to purchase this new mountain bike. And it was actually, it wasn't even new. It was used from a friend of mine. But I wanted to purchase this mountain bike. It was $400 and it was awesome mountain bike, awesome mountain bike. Um, and I was working at the time, saving money to purchase this thing. And and I remember, honestly, I've had that mountain bike for most of my life up until just recently, and it reminded me of what I needed to do to save, to budget, to be able to purchase that mountain bike. I still remember to this day, um, my friend and his dad bringing the bike over to our house. Um, and I remember, doing a bill of sale with the serial number and everything. So that was something that was important to me at that time. Now, as an adult, things that might be important, maybe I want to budget for a new car, or maybe I want to budget for a vacation or something. It's identify what's important and then start to break those things down. That's going to be very important throughout our life. So, as we're looking at our life goals again, would you like to own a home? Um, do you want a family? And so if you're younger and you don't have a family, do you want a family? There's some people that don't. Do you like to travel? And so do you want to budget for that? And the other thing is do you want to feel more secure financially? Interesting thing, I ran some numbers today um, on $17,500 that's invested today. That equates over a period of time for compounding effects of money over a 30-year span. It equates to $191,000. Now that's on a grand scale, but let's say that you were to invest on a much smaller scale, maybe $50 or $100 or $500 when you're 14. That $500 when you're 14, it's very interesting. When you are 14, that money, if you were to invest $500 today at an 8% return, and let's say that you're going to pull the money out when you're 65. That $500 grows. What do you think it grows to? 10,000? 20,000? 30,000? $500 when you're 14 years old, invested into a growth account for 612 months until you're 65 will grow to $45,000. $45,422 to be exact. Compounding effects of money are real, and that's something we'll talk more about in the future, but starting to invest when you're young and early in life will really catapult you to financial success. So just some food for thought there. So how is having a financial plan for money important to achieving what you want in life? And again, I mean, really having that financial plan in place so when you do get older, your plans are going to change when you're 14, 15, 16, and when you're in your 20s, when you're in your mid 20s, they're going to change. When you get older, they're going to change. And so really looking at what what you want long term. And again, your goals can change over time, and they will change over time. What's important to you today won't be important to you in 30 years from now. Um, but be willing to grow with your plans and then pivot your plans as necessary. Now, one thing I want to share with you here is what we call the money mindset continuum. And as we go through, uh, where do you fit on this continuum right now? Are you feeling overwhelmed and stressed, reactive, unorganized? And of course, you're going to feel different ways the age that you are, of course. So, are you feeling aware but fearful, cautious or organized, confident and goal-oriented, growth-oriented and strategic, or empowered and wealth building? So where do you fit on the continuum? Where are you, where do you find yourself on that continuum? Because at different levels on the continuum, that's going to impact how you treat money. And it's important to know where you are. And we're going to talk more about this as our future classes go forward. But at the end of the day, our goal is to be able to take somebody who might be overwhelmed and stressed to empowered and wealth building. We find that we do that the second that you understand money and how it works, because as you understand money and how it works and how powerful it can be, you're going to be more empowered. And so I found in being a mortgage broker and helping clients purchase homes, that would provide the money for them to be able to purchase homes, I found that a client is the most stressed when they don't know what's going on. And so when you know what's going on, the more education that you can have, this is why I'm sharing these things with you, the more education that you have, the more empowered you're going to be. And I really want you to be secure in your future. So we'll continue working on that. Now, as we go forward, it says, did you know you can change the mindset and attitudes that you have about money? And this is where I want to talk more about this, because again, money is going to change the way in which we look at a lot of things, and specifically our attitudes and our mindset about money, childhood experiences, learning facts, media, social media, keeping up with the Joneses, seeing other people's lives. And so I think that media really plays a big role in this in today's market, and that saddens me in one sense, because as we see people on social media going on all these lavish vacations and everything, I understand that social media is not real. I mean, at one point last summer, I had three Facebook friends that were in Europe at one time. And they're sharing all these lavish things that they're doing. One of them I knew really well. It was a personal friend of mine. And I know that he and his wife saved for that vacation for several years. So it wasn't just something that they're just going and doing, but it seemed like to me that everybody was going on vacation. But that just wasn't really the case. And so that could cause me then, if I felt that way, I could dip into my credit cards and go on vacation. But then when I come back, I have to try to pay for that somehow. So So how does that, how does that affect you? I'll tell you that a childhood experience for me, um, the childhood experience was something, when I grew up, we didn't have a whole lot of money. My dad had to retire, medically forced to retire when he was in his 50s. It was roughly 50, 51. This was in the early 80s. And he had multiple sclerosis. And so he was told if he didn't retire right away, that he'd be in a wheelchair within 6 months. So I'll tell you that growing up finances were extremely tight. I mean, extremely tight. Honestly, if it wasn't for my grandparents and for our church at the time, we probably wouldn't have survived, honestly. So our church helped with some food and that, and then my grandparents, I remember, would come over and they would help my parents financially with the mortgage and some other things. But what I remember about that time, and I've pondered more and more about it over the years, but what I remember more and more about that time was that I remember our cars would break down, and they would break down all the time. I remember we had a 1977 Chrysler Cordova. This thing was a boat, it was a huge car. And I remember that thing breaking down. I grew up right here in Salem, so it broke down right in the intersection down here of Browning and Commercial. So a pretty big intersection. And I remember when it broke down. I remember I'm young. I don't remember how old I was, but I was young, and I'm trying to help push the car out of the intersection. I remember, we had a 1966 Volkswagen Bug, and this thing was beat to heck. It was the car that I learned how to drive on and to drive with. Great car for that, because if I hit something, it would, it didn't matter to me, as long as it was a tree or something. If I hit another car, that would be bad. But I remember this thing was red, oxidized, and I actually really loved that car today, but at the time I really didn't. I was embarrassed by it, and both of the quarter panels in the back had been hit from other people, and so they were both smashed in a little bit, and it was red oxidized. So if you touched it, the red paint would come off on your fingers. And so I was very embarrassed by it. So I'll tell you that one thing in my mind today is I have to drive a newer car that is under warranty. And I'll get a new car typically every 2 to 3 years, which is one of the worst financial decisions you can ever make. But that's something that is a childhood experience of mine that I still live with today. And if I keep a car for more than really 2 to 3 years, that's a long time for me. But it's something that I don't ever have to worry about. The car's under warranty, so if it breaks, the warranty is going to take care of it. So that brought peace to my mind. I've never had to push one of my cars or anything like that. I haven't been embarrassed by my cars. And so anyway, that's just a little insight into me and really with that, how childhood experiences can really shape how you think about money as well. So the 8 pillars of financial freedom, again, we're going to talk about these more as we go forward throughout the next 10 courses, and the next 9 courses. We're talking about mindset of money, which is next course, next month. Income and career. We're going to talk about budgeting, savings, credit building. Now, I did just send out it was last month, I did an interview with my credit repair specialist, Jesse at mycreditguy.com. And I did a whole credit course. This was specifically for realtors, but I did send it out to all of my clients. If you haven't seen that, please let me know. I can send you the link. If you haven't seen it, please look in your spam, because it could be in your spam. I'm finding that a lot of my emails are going to spam. So we're going to talk about debt management. Again, getting your first credit card, then debt management, real estate and home ownership, and then investing in wealth building. So those are really the 8 pillars of financial freedom that we're going to talk about in the next courses. So knowledge is confidence. And this is really one of our mantras with First Home IQ. And so knowledge is confidence. So let's begin. Understanding how to build wealth by starting early. In the example that I shared with you, if you took $500 at the time that you're 14 and invested it at an 8% return until you're 65, that grows to be over $42,000 or $45,000, a pretty substantial amount of money. So, yep, $45,442. So, starting early is key when you're investing, and the money compounds and grows very exponentially. In fact, every 7 to 10 years, it's going to double upon itself. Earn income and protect your money in a bank account. That's the best place for it. Start saving money early, opening a savings account, and watch your money grow by investing. So where does your money go? As we look at bank accounts, we really look at a couple of different places that your money can go in a bank account. So why do people use banks instead of just keeping their money at home? Well, the reality is that because banks are safer. At home, it can get robbed. You can have a fire. I mean, there's so many different things. And so, so really it's safe to be in a bank, specifically in an FDIC insured bank, which is going to insure your money up to $250,000. You can have a checking account and a savings account. Let's talk about both. So there's 4 ways that banks keep your money safe. First is again, the FDIC ruling. And so your money's safe up to $250,000. So you won't lose it. If the bank goes out of business for some reason, which we saw a couple of years ago, at that point, the feds get involved. Sorry, I'm going to sneeze. The feds get involved, and they're going to protect your money. They're going to give you your $250,000. So they have security systems, and they have pretty darn good security systems, much better than what your house could have. They're monitoring banks, continuously monitor accounts for suspicious activity. And so, so if your money, has the threat of fraud or something, banks are monitoring that. And there's regulations to keep your money really safe. Now, again, you can put your money between a savings and a checking and a savings account, and knowing which one is going to be important. So checking account, you hold your money there. Move this here in the center. So in a checking account, that holds your money there for everyday living. And so this would be for your general expenses, your food, car expenses, personal care, all of those. You've got a debit card that you can use. And so, or you can use your phone to pay with your checking account. So you can use Apple Pay or whatever with your debit card, whether you physically use a debit card or not. Savings accounts really are there to hold money for something in the future, something that you're doing in the future. Now, savings accounts, you really want to look at what type of a savings account do you have. With the savings account, you can end up having money that, and how many savings accounts do you have? So do you have a savings account for vacation? Do you have savings accounts for, maybe you want a savings account for clothes shopping? A savings account for, whatever, I mean, it could be whatever. It could be savings account for Christmas. So you can pay for Christmas. There's so many different areas of savings accounts that you can have, but you want to look at what type of savings account do you have. With savings accounts, most of them don't pay a whole lot of money, so you don't really earn a lot of money. You want to really look at, I know Capital One has a great savings account that pays close to 5% interest right now. And there's other credit unions and other places that have great savings accounts. So you want to look at those types of savings accounts that pay a decent amount of money for keeping your money in there. So you want to watch your money grow, and you want to, again, start saving early. Here we just showed a savings account for travel, education, car, house, health. So how do you open an account? Well, either way, whether it's a savings or a checking account, how do you choose what bank to go to, and how do you go about it? So my thought on this is that you first really start to look at, do I want a bank? Do I want a credit union? What's important to me? Is it important to me that I can walk into a bank? Or do I want to do everything online on my phone? Do I want free mobile banking? Do I want overdraft protection? And so what is overdraft protection? That is if you go to pay for something, you have a bill or something that hits your account that you weren't anticipating that they pay the bill, even though you don't have the money in your account. I will say you want to be very careful with that because there's fees for that. You're going to hit an overdraft protection fee with your bank and potentially with the other bank. And before you know it, that $10 Netflix account that overdrafted your account, instead of just trying to pay it the next day when you have more money in the account, actually overdrafted your account, and it could cost $39 for your account, and it can get very, very expensive. So the reputation and convenience, what type of bank do you want? Do you want a national bank, a regional bank, again, a credit union? Any minimum fees, all of that. So from there, what to bring to start the account. If you walk into the bank, you're going to need a copy of your driver's license, or you're going to have your driver's license, an ID card, social security card, potentially. You're going to have your social security number, your proof of address, and then a complete application online or in person. So proof of address can be a utility bill or something like that, but you're going to need those things. So just as this process, as we were looking at the mindset of money, it's one question that we have is has your mindset changed at all? Just about setting up an account or anything else that I've shared. Are you a little less stressed? Are you a little more knowledgeable, a little more motivated? The rest of the courses that we teach, we're going to go a lot more in depth on items. So own your future by focusing on these areas. There's going to be the mindset of money, goals, and then knowledge. So let me back up on accounts here. Again, really, with savings accounts, again, what type of an account do you want? So with the checking account, do you want to cut checks? Do you just want a debit card? What do you want? Savings accounts, do you want a money market account? You want just a general savings account? What's important to you, as I talked about goals early on, what's important to you in a savings account? Is it important that you have access to your money right away? Or is it important for you to help build credit? Is it important for you to just have access to your money in a couple of days? Do you want a higher rate of return on a savings account? Or do you care if there's a rate of return on your savings account? What's important to you in that? Now, one thing that I want to share with you is that again, really mindset of money and how our mindset changes over time. Um, for me, growing up, um, we found out that with my dad, he again, he had multiple sclerosis and had to retire early. And we found that he had energy in the morning. Most of his energy was in the morning. And so he could kill two birds with one stone. One, make some money for the family, and get a newspaper route. And so one route turned into two, turned into three, turned into four. And those newspaper routes then helped our family financially. And my mom and dad delivered newspapers in the morning, Monday through Friday. I would then help on Saturdays and Sundays. And then, of course, during the summers. Now, I'll say that this helped me to learn a work ethic that I wouldn't have today. I'm grateful for that. My dad taught me that if a job is worth doing, it's worth doing right. And so he taught me that, you don't throw the newspaper up to the door, but instead you go up and lean it close to the door so people could open the door and just reach out and grab the newspaper. So that was a work ethic thing. That was doing the job right. But I'll say that through that, one thing that my mom and dad ended up doing was they gave me a little bit of an allowance with the newspaper routes. And so I ended up starting a savings account with the Statesman Journal Credit Union. So the Statesman Journal was the newspaper here in town, and they had a credit union right downtown. So they owned their own credit union. And my dad told me early, hey, let's get you a savings account. I don't remember. I was young enough that I don't think I could get my own account. And so if you're younger, then your mom and dad has to come in and go in and sign with you. And so I'm pretty sure that's what happened. But all I remember is I had a savings account there, and I would take my money and any money that I would make from any other areas, whether it's washing cars, or whether it was mowing lawns, picking weeds, whatever, um, picking strawberries, whatever, um, I would take and I would put into the account. I remember I was in junior high, I want to say. I know I wasn't in high school. It was junior high or even elementary school. I think it was junior high, where I remember I wanted to buy this new set of golf clubs. And so I had this really old set of golf clubs, and I really loved golf at the time. And so my dad wanted to teach me not only budgeting and how to use a checking savings account, but he wanted to teach me how credit worked as well. And so he wanted to help me get my credit started at an early age. So I told my mom and dad, I said, hey, I'm going to go buy a new set of golf clubs. And they were all for it. My dad said, how are you going to pay for it? I said, well, out of my savings account. He said, okay, do you have enough money in your savings account to pay for it? And I said, well, yeah, I do. He said, okay, great. He said, why don't you get a loan for it instead? And I thought, well, why do I want to get a loan for it? And so he talked about how that can only help to build your credit. So again, I don't remember if my mom and dad had to sign with me on the loan or not, but I remember I filled out the loan paperwork. My income was, one of the newspaper routes, and so I remember I had enough money in the account to pay for the golf clubs, and so it's a credit union, so they can write their own loans. So I remember I got approved for the loan, and I went down and I got my check. I went to the golf club place and I purchased my golf clubs, new bag, new shoes. I was the man. And so I remember going and doing that. And I remember I would go down monthly and I would pay my the monthly amount that I had to pay for the loan. And I did that for about 4, 5, 6 months, to where I was kind of done at that point, and I was just done going down and dealing with it, to where I just transferred the money out of the account and paid off the loan. And so that helped me to build credit. Now, fast forward to I'm 19 years old. I'm now working, graduated from high school, been out of high school a couple years, and I'm purchasing my first automobile. I've been using a car that my mom and dad, had let me use, and so I'm buying this car. It was a 1987 Toyota four-wheel drive. Loved that thing. And I went down to the Statesman Journal Credit Union. That was the first place that I went, because I got the loan before from them. Still had the account opened, and I still had some money in it. So I filled out the paperwork. I was working at the original Pancake House at the time, assistant manager there, and so it was very simple for me because I had a track record with them. I immediately got a loan. It was a $10,000 loan. So a 19-year-old getting a $10,000 loan, that's pretty rare, unless you're in school and all creditors want to give you money in school. So luckily I knew how credit worked, and I kept paying on the account, and that I paid that off. Go a couple years later, I remember I had sold that truck and purchased another car, and then that car didn't have air conditioning, and it was a really hot summer, and I thought, I've been working really hard. I'm now working for a different company, and I was in my car a lot, and so I really wanted air conditioning. And I remember seeing this Honda Accord, 1991 Honda Accord, and this is now about 1995. And so I'm now, what am I, 22 years old. And I remember I went to the Honda dealer here in town and negotiated a sale on my car. They were buying my car, and I was buying the Honda Accord. And they pulled my credit, and the finance guy basically showed the screen to the salesperson and said, Walt can have any car on this lot that he wants. So that was just building my credit, and that was doing that from that savings account. So budgeting properly, and that helped to build my credit over time. So again, we'll talk more about credit as we go forward, but really budgeting through that savings account, growing the money in your savings account, using a checking account to be able to cover all your day-to-day expenses, your Starbucks and everything else, and your rent and food and everything. From there, then it's going forth, having a savings account for those extra things that you want to buy. So I hope that really has helped in that sense. Again, as we go forward, these courses are courses that I am teaching currently in high schools and with employers. So if you know of an employer that would like me to come in to teach these, if you're at a college and would like me to, I've taught them at Shemeketa, at C-Tech here in town, and other schools. If you would like me to come into your school, I'm happy to do it. It is through First Home IQ that I do that, again, a nonprofit agency. And then, of course, I still have my day-to-day job, which I help people finance homes. So you'll find that as we go forward here, there's some videos that we're going to watch. So it's going to be engaging video content. We're going to have quizzes from time to time, and easy to follow lessons, questions and answers, and everything. So just ask those away. We're going to talk about, again, the psychology of money, financial planning basics, credit and debt management, rent versus buy strategies, the path to home ownership. And one thing that I would ask if you guys would do is please take a minute and take our first home IQ, call it a quiz, but really it's just a good idea of where you are, where your knowledge is on fiscal literacy. And so I'll say that people even in my industry, um, they sometimes they don't do really well at this quiz. So, but it's a great quiz and have fun with it. The whole family can take the quiz, um, and whoever gets the highest score can take the family out to Dairy Queen. Um, take money out of savings to go do that. So, um, yeah. So I hope that this really made sense. I look forward to sharing the next 9 courses with you. I look forward to going deeper with you on fiscal literacy principles, debt management, credit, budgeting. Again, next class is going to be on the mindset of money. And so where did we come up with that mindset? Like I shared earlier with you about my mindset about cars. And I'm going to share a lot of different things with you that will be personal to me that I hope can help teach lessons to you of things to do and not to do. So I would say don't follow me on buying a new car every couple of years. That's not a good financial thing. Um, and so, uh, it's not wise. That's one of the things that my dad would say is do as I tell you, but not as I do. So I appreciate you guys very much. If there's anything I can do for you, please let me know and have a great night. Thanks, guys.